you can actually buy a home with $1,000. It's a lot easier than people think. You just need the knowledge, and I'm gonna share with you how. Hey honeybees, welcome back to my channel, or if you're new, my name is CIARA. I'm a full-time mortgage loan officer and a YouTuber, and I've helped thousands of people to buy homes and to build wealth. So I take everything I know and I share it with you in hopes you will build wealth also. I also show you behind the scenes of what it's like to be a mortgage loan officer, as well as a YouTuber and a wife. I hope if you like this video and other content I make that you'll stick around and subscribe. Okay, so I wanted to do this video I've seen going around. There's people doing videos about how to buy a house for $1,000. That absolutely sounds like a scam, but in this video, I'm gonna share with you how it's actually possible from the perspective of a mortgage loan officer. You can actually buy a home with $1,000, and I'm gonna share with you how. The key to spending $1,000 or even less is going to come down to your down payment as well as your closing costs. There are ways to minimize your down payment as well as minimize your closing costs. So I'm going to get into both of those. Okay. Lowering your down payment is actually so easy. It's way easier than people think. A lot of people think that you have to put 20% down. You absolutely do not. To give you perspective, if you buy a home for $100,000 FHA, your down payment would be $3,500. So the way that you want to get around having to put as much down is to go for a loan type which will minimize your down payment. There's a few ways to do this. You can do this by choosing a loan type that offers a zero down option. So that's either using a USDA loan or a VA loan. The limitation on those though is if you get a USDA loan, your property has to be within a certain area that the USDA deems as a rural development. Also with the VA, you have to be a veteran. So if you're not a veteran, then you can't take advantage of that. As well as if your property that you're looking at is not in an RD, you cannot get a USDA loan. But there are some other options. You can also look at down payment assistance. There's multiple down payment assistance programs. You want to talk to your lender. In the past, I have used down payment assistance to help borrowers who don't have enough funds. You can also look at any other programs your lender has that will lower or minimize your down payment. So when it comes to minimizing your down payment and only having to bring $1,000 to closing, the first thing you want to figure out is your loan type. Are you gonna go FHA and go down payment assistance? Are you gonna go conventional and go down payment assistance? Or are you gonna go the USDA or VA route? Or does your lender have a specific loan program where it minimizes your down payment? You want to look at all those options first. Okay, number two. So another way that you're going to only bring $1,000 to closing is by minimizing or eliminating your closing costs. But how do you do this? One way to minimize your closing costs is to be mindful of the property you choose. Why? Because the property you choose is going to determine how much your homeowner's insurance is and your property taxes, both of which are included in your monthly mortgage. This is considered your escrow, and this is a big chunk of your closing costs. An escrow is a pile of money put together that is drawn from to pay your homeowner's insurance and your property taxes. One of your biggest closing costs is your escrow, because very simply, I don't want to go down a long and windy road trying to go into depth about escrow. If you guys want more information on this, let me know. But I bring up escrow to explain that a big portion of your closing costs is your escrow that is maintained for your homeowner's insurance and your property taxes. So if your homeowner's insurance and property taxes are extremely high, guess what? That's gonna make your closing costs high. The higher your homeowners and your property taxes, the higher your closing costs. The lower your homeowner's insurance, the lower your property taxes, the lower your closing costs, and the lower your monthly payment. So my advice is to first be mindful of how much you're gonna be paying for your homeowner's insurance and your property taxes. When you're looking at homes, inquire, ask what the seller pays for homeowner's insurance and property taxes, and use that to work with your lender to gauge what you can afford, what feels comfortable for you monthly, and what feels comfortable in terms of closing costs. So you're mindful of these things, which is gonna help minimize your closing costs, but you still have closing costs. How are we getting these down to only $1,000 or less? 2 words: seller concessions. Seller concessions are basically money the seller gives you to cover your closing costs. Depending on the loan type, they can pay anywhere from 3 to 6% of the purchase price. Whatever that amount is, that's how much they can pay of your closing costs. For FHA specifically, the seller can pay up to 6% for your closing costs. So when I say 6%, that's 6% of the purchase price of the house. For example, if you have a house that you're buying and it's $100,000 and the seller is going to cover all your closing costs, that means they will cover your closing costs up to $6,000 because they can pay 6%, up to 6% in closing costs. Does that make sense? $100,000, the seller can pay up to $6,000 of closing costs for you. So let's say that you do get a house for $100,000 and you've got down payment assistance that's going to cover all of your down payment and you just need your closing costs. What you're going to do is have your realtor to negotiate as much as they can in seller concessions. On a house that's $100,000, you're looking at anywhere from like $4,000 to $6,000 for closing costs. Let's say your closing costs are $6,000. That means you're actually bringing nothing to closing. Say your closing costs are $7,000 and the seller is paying $6,000, then that means you would bring $1,000 to closing. The key to bringing minimal amount to closing, $1,000 or less, means that your down payment needs to be minimal or none, and your closing costs majorly need to be covered by the seller. And literally that's all you have to do. It's actually pretty easy. I've even had cases where the borrower didn't have to put anything down and they actually got money back at closing. It's a lot easier than people think. You just need the knowledge. All right, so to kind of pull it all together, if you want to pay $1,000 or less for a home, you're going to need to minimize or eliminate your down payment via the loan program you choose, as well as get all or a portion of your closing costs covered by the seller. That's going to allow you to bring only $1,000 or maybe even nothing, or maybe even get money back. It's so much easier than people think. You just need the knowledge and a good mortgage loan officer. So that's pretty much it. That's how you're gonna get a house for only $1,000. I hope this was helpful for you. If it was, please do give me a thumbs up and comment below to let me know. It really helps guide me on what kind of videos to make for you guys. Don't forget to subscribe so you can be a part of the Honeybee fam, and make sure to hit the bell button so you're notified when I upload. Especially if you have a question or comment you really want me to address, make sure that you have that button clicked, as I respond to all comments and questions on the first 24 hours the video is up. So in order to catch that, you'll have to make sure that bell button is clicked so you can get notified. I want to thank you guys so much for watching this video. I love you to the bank and back, and I will see you in my next one.